The gold market has roared back to life Friday as several factors are combining to work in favor of the yellow metal bulls. Joining us today is Gary Wagner, editor of the Gold Forecast. Gary, good to have you back on the show.
It's great to be here. Great to be here as always. And it's certainly an exciting day today.
Absolutely. Gold prices rallied in the immediate aftermath of a surprisingly weak U.S. employment report. That news fell into the camp of the U.S. monetary policy doves and the precious metal bulls. If gold can now take and hold 1140, Gary, is this the new base?
Well, you know, 1140, 1141 is an important number. The most important number that I had in terms of a support level was roughly between 1109 and 1112. And when you look at the recent lows that we hit a couple of days ago, Thursday and Wednesday, those were the lows that we hit. And those lows held. Obviously, the fact that we had a very dismal jobs report pushed the precious metals up. And the key level that we're looking at is going to be 1140, but more importantly, 1157.
You know what I find interesting, Gary, is we hadn't seen gold respond to weak economic data over the course of the summer. And why is it different today? Why did it respond so significantly today?
Well, you know, gold is a fickle friend, and different data points that will normally affect gold, we've seen not affect gold. So it's been a quagmire, to say the least. However, what I believe is that the numbers came in, the jobs report numbers coming in at 142,000 under all the estimates of all the economists was such a low number that the current take, at least for today, is that they certainly, meaning the Fed, cannot raise interest rates this year and probably not till March of next year. And that kind of perception, I believe, is what has really propelled gold to higher pricing.
Well, I want to pull up a longer-term chart now, Gary, because the big question is this just a short-term bounce, or will we be back down next week? What's your longer-term forecast here for the metal?
The interesting thing is that we have seen it trade within a range on the low side of about 1100. On the high side, I think it's been 1157. That was the last high we had just recently, and prior to that, we had a high at 1171. In my opinion, on a technical basis, we really need to see gold go and close above 1157, meaning a higher high than the last high, before I can get bullish long term. Right now, we don't have any technical evidence that we have broken out of that range. We're still trading between 1100 and 1150.
All right, Gary. Well, before I let you go, let me ask you, were you surprised by today's news?
Yes, I was. There's no doubt. The numbers came in extremely low, and the reaction that traders had in the gold pits and globally was one that took me off guard. I expected a spike up once we got the numbers, but this is a pretty sizable spike up. But we've been seeing this kind of volatility within gold where we're getting these $20 plus days. The question is whether or not we can sustain these rallies that we see in the market, because they seem to kind of move out of limelight once they hit the top of that trading range, meaning about 1157.
Good thoughts, Gary. Thanks so much for being with us.
It's my pleasure, and I want to wish all of our Chartist viewers a great weekend, and most importantly, prosperous trading and investing next week. We'll talk to you real soon. Bye-bye.
Thank you, Gary, and thank you for watching this edition of Chart This. We have Jim Wyckoff up next.